Welcome to the Weekly Market Wrap-Up. I'm Hannah Bernard. Markets staggered briefly this week as the realities of a normalized monetary policy began to settle in. Yes, the Federal Reserve announced this week the end of its historic bond buying program. How did investors take the news? Let's find out. All three major U.S. indices took a dip on the Fed news this week, but they recovered quite quickly. The Dow Jones surged 221 points Thursday, up 1.35% to close at 17,195. The S&P 500 also continued its upward trend, gaining 12.35 points or 0.62% in value to close Thursday at 1,994. And the Nasdaq delivered a solid week, riding the Yahoo rally for one. The tech-heavy index rose nearly 17 points Thursday to close at 4,566. Now let's turn to Canadian markets, which delivered a much shakier performance. The Toronto Stock Exchange took the Fed announcement hard, dropping 96 points Wednesday and then another 69 points on Thursday to close at 14,458. The TSX Venture Exchange also continued its long ride down, losing 9.42 points or 1.2% in overall value on Thursday to close at 771. So as we said, the Federal Reserve ended the historic quantitative easing program on Wednesday, ceasing the $15 billion a month bond purchases it had been making, which is a far cry from the $80 billion it was just a year ago. The program began in an effort to keep the economic recovery going. In its statement, the Fed communicated a hawkish sentiment about the health of the economy and the likelihood that we will see the growth continue. The sentiment raised concerns amongst investors that a more hawkish stance from the central bank will raise interest rates sooner than indicated. Now, although it ended the program, the Federal Open Market Committee did keep up the considerable period of time language in which investors had considered crucial in the central bank's map for when it would raise interest rates. The considerable time refers to when the Fed will begin raising rates after the end of the monthly bond buying. To that end, the Fed said it would keep its short-term rate anchored near zero until it sees more improvement from the economy. So this is good news. Now to winners and losers and our picks for the week. The winner for this week is Lakeland Industries, ticker symbol LAKE. Shares of the hazmat suit maker have been quite volatile this month as investors react to the Ebola crisis. Lakeland produces hazardous materials protective gear for healthcare workers treating Ebola patients. Just 2 weeks ago, Lakeland was our loser, but this week its stock soared. On Thursday, shares skyrocketed nearly 23%, up 2.66 to close at $14.24. The big bump came on reports Lakeland has booked 1 million orders for Ebola-related protective gear and is successfully shipping on orders placed at the beginning of October. The loser for this week is Owens Illinois Inc., ticker symbol OI. Shares of the glass container manufacturer sharply dropped Wednesday, losing 9.5% to close at $23.53. The hit came after the company cut its full-year outlook following a mixed Q3 earnings report with a 5% drop in profit and a 2% decline in net sales. Owens Illinois is the largest glass container manufacturer in the world. They have 77 plants in 21 countries, and it provides bottles for just about every major soda, beer, and liquor brand. Well, those were our winners and losers for this week, and now it's time to check in on the gains that you could have locked in by following the weekly watch list from Robert James and Viral Stocks. All right, that's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Here are 3 U.S. stocks to watch. First up on Monday is Lowe's Corp with an EPS forecast of 67 cents compared to 84 cents in the prior year quarter. Next up on Wednesday is Tesla Motors Inc. with an EPS forecast for a loss of 15 cents compared to a loss of 5 cents in the prior year quarter. Tesla this week reported September sales in North America were up 65% year over year. Finally, on Friday is Humana Inc. with an EPS forecast of $2.01 compared to $2.31 in the prior year quarter. And here are 3 Canadian stocks to watch next week. First up on Tuesday is TransCanada Corporation with an EPS forecast of 61 cents compared to 63 cents in the prior year quarter. This week, TransCanada filed an application with Canada's National Energy Board for approval of its proposed Energy East pipeline. Next up on Wednesday is Tim Hortons Inc. with an EPS forecast of 88 cents compared to 77 cents in the prior year quarter. Finally, on Thursday is TELUS Corporation with an EPS forecast of 62 cents compared to 56 cents in the prior year quarter. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel or podcast on iTunes and find us on Facebook and on Twitter. For Viral Network News and BaseStreet.ca, I'm Hannah Bernard.